All right, welcome back for another episode of Carnivore Trades. Today is Thursday, December 8th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, into the markets here. So we got a bounce. Yesterday I said it was likely we had a little minor cycle date for yesterday, and we got a little bit of bounce today. I thought probably we would gap down though. That was kind of my bias. Maybe even into that 390 area. The put call ratio, I mentioned that yesterday, finished at 1.22, so it was pretty high. And actually, let me check that really quick right now. Yeah, today it did come down, so it's still pretty high. It's still at basically 0.92. But we got a bounce like we predicted yesterday, and we're kind of just in kind of grind sideways mode here. We had a little opening range break up into 1030, and that's really been sideways. Sideways to negative a little bit for the most of the day. The triple Qs are still holding up a little bit better, and that is mainly because the semiconductors, and I mentioned this to my members a little while ago, it looks to me like they're really, from what I can see here, what they're doing to keep this market up right now is NVDA. This is up 6.5%. To me, this has really no business being up this much, but maybe we're gonna get news here, so that's certainly a possibility. But it does look like it's almost company specific. Broadcom does report after the bell. They're up 2.5%, but it's not like anything crazy here. And then really, it's kind of just mixed across the board. Intel is a little bit green. KLA 10 core is having a nice day. Applied Materials is up. So it looks like they're mainly bidding NVIDIA though, and you can see AMD is actually barely green here. So definitely on the weaker side, but they're using SMH primarily, United Health, and JP Morgan to really kind of keep the market up here because there is problems. We're seeing, again, a dynamic shift. We talked about this yesterday. XLE is not leading anymore. Remember, I talked about that. I was kind of every single day I was in here like, the only reason the market's not crashing right now is because XLE is green, and it was up and up and up. So, so many days. And now it's, definitely leading to the downside. In fact, that's a pretty ugly candle there. Gap into the 50 moving average, back testing it, and now closing basically at the lows here. We're about 15 minutes out from the close here, and XLE down almost another 1% on the day. So not a good look there for energy. And the thing that's kind of escaping me right now, logically, I just tweeted about this, but I'm not seeing really that many people talk about it. You guys know I've talked about it last couple of days, but why is this not like front page stuff here? Bank of America down another 1.2% on the day. And I asked the question, if you're in the camp that we're going to get a Santa rally, what's your price target end of year for Bank of America? How about Goldman here losing 360? So that's below support now, down $3 below support. That looks like it wants that gap and 50 moving average. Citigroup, very weak here, cutting through all those gains in a couple of days. Now kind of starting to form like an inside bar there. Wells Fargo, same exact thing, although Wells Fargo managing to scratch out a little bit of a gain today. Credit Suisse, all-time lows. Credit Suisse is green today. Give it the benefit of the doubt, but all-time lows here. I think the market right now, or at least I think a lot of participants are looking forward to CPI and Powell next week, obviously for obvious reasons. But I think that the next bear catalyst, if there's going to be one, I think it's going to come out of the banks. I know I kind of touched on that yesterday, but I don't see very many people talking about this. This is not something you want to ignore. When you see Bank of America just have the bottom completely fall out of it, look at the regionals, KRE, big banks, KBE. They're in a lot of hot water here. The reason XLF is able to hold up right now, and that's the other one. I said XLV, JPM, SMH holding the market up. Berkshire as well. That's also kind of holding the market up right now, and that makes up a huge weighting of the XLF and the VFH. So you're not seeing as much damage on these charts as the Berkshire just holds such a high weighting in those. But you look at the big banks, the actual money center banks, the Bank of America, JP Morgan's been able to hold up here, but it did break through these pivots though. My issue is that there's something going on here. Liquidity, I'm not sure, but this is not how financials behave in a bull market. And I don't see anything good here. I just don't see how this is going to be any sort of constructive kind of a case for a bull rally. And another thing too, we've been consolidating since we've been consolidating for a month now, a full month. And the bulls, we've had light volume. I've mentioned that every single day in here. We've had light volume, declining volume on the pullback, up volume on the big moves. And yet, what have the bulls done with that? Well, I mean, they've had every chance to rally us up. We popped up on Powell last week, gapped up, gap and crap, no follow through. We negated the inside bar yesterday. I think there's some problems going on here underneath the HUD. And honestly, I think the market is topped here. That doesn't mean we can't have a rally on CPI. It doesn't mean we can't have an algo pop. Basically, the only way the bulls can rally these days is because we get an algo pop on some data. And again, the bears haven't showed up that much yet either. But I think there's problems here underneath the surface. And I think that any sort of bid that comes off of CPI or Powell next week, I think it's going to result in a lower high. We did break this trend line here on the spiders. We confirmed below the inside bar. It's just there's too many negatives here on a technical basis. The best thing you have going for it right now is that volume is holding up, or the volume is light, and the triple Qs are holding up. The triple Qs still have not negated that inside bar, and the semis are holding up really well. So give them credit here, although a lot of it is just NVIDIA, which leads me to believe that they're just gamma squeezing that one name to kind of keep everything afloat right here. So SMH, that, again, same thing. I've been saying it all week long. The positives here are the SMH is holding up. It's holding up well. They've been bidding it up all day long, and the volume is light, and that's really it. We talked about this earlier this week. I'm going to say it again. The transports, back below this trend line, negated that inside bar, negated that pivot. This is a dead cat bounce off the 100 MA. We were up earlier, we had actually made a higher high, and now we're basically flat here. So we're only up. Now we're flat. Now we're turning negative here on the transports. So not a good look there on DJT. We mentioned the semis, obviously. IGV's having a decent day. We'll give it credit there where credit's due. Let's take a look at Salesforce. Yeah, Salesforce still getting hit. Oracle having an okay day. Adobe up decently. But IGV here. So, again, still a lot of weakness, though. Yesterday we lost that pivot there. And it's getting a bid today. They're kind of like, they're keeping it afloat for now. But, now we're seeing IWM, show laggardship again. This is starting to, put in an inside bar here on the daily. This has been weak all day long. It's actually got an inside bar here on the 10-minute as well, and showing weakness into the close as we get into the 350 time frame here. I'm not liking what I'm seeing here from the internals or the technicals or anything under the hood. As far tomorrow, could we rally up? Especially if we start to rally up, if we start to float up into the CPI, I would be very suspect of that. But we do have an hourly inside bar here on the spiders, so we'll respect that. We could pop up tomorrow. But then if you flip over to the 4-hour, it's the opposite. You've got a bearish inside bar with a failure. So this inside bar here failed. Now you have a bearish inside bar. So I'm definitely in caution mode. I'm leaning bear here, big picture. Near term, I'm kind of like trying to give the bulls a chance to push us up, maybe to that 200 moving average again, maybe back test this trend line. If we look at the ES here, this looks very similar to late August, where we broke this rising wedge, right? We had a rising wedge, went into this trend line, it topped out, broke down, we curled back up, and then we got dumped. And then we rolled over. By the way, I've been getting a lot of messages about the ES contract rollover, because we did squeeze up into that, and then we in fact gapped up when we had contango. We have contango now, so we could gap up into that, but it got rejected really hard the last time. So I'm seeing kind of a lot of similarities here to late August as well. So I do think we do have a chance to curl back up, but if we do that into CPI, into the Fed, and the Fed doesn't do anything that we don't expect, I'd have to think we're kind of set up for a sell the news, and that's something I said here really last Wednesday. I said, now it's kind of a sell the news thing, unless the Fed says something different or something drastically changes. But that's just kind of my stance right now. Let's take a look at interest rates. Interest rates been kind of all over the map today. 10-year is higher. It did finish up 2.44%. So a little bit of a bounce there. Same thing with a 30-year, up 1.17. I haven't looked much at the yield curves today. I'll just quickly. Yeah, so getting a little bit of relief here. Not much though. Yield curves, 5s and 30s did take a pretty big hit though. But again, still highly inverted on most of these Most of the main ones, 2-year was down a little bit today, down 13 basis points. Nothing terrible here. You still have kind of a somewhat bullish pattern here. And again, maybe you can get up and satisfy that inverse head and shoulder target just above that 100 moving average. But again, not a whole lot going on in bond land right now. But again, it does, I've been saying this a lot recently. It does look like the market's trying to price in a slowdown. It did have a little trend line break there on TLT, so we'll continue to watch that one moving forward. Home builders continue to show strength. So XHB up 36 basis points today. Which is pretty much on par with what the market is. Yeah, spiders are up 0.5%, so nothing crazy. But I still like that pattern here. Home builders are still holding up. ITB up 8 basis points. It's hanging in there okay. So we'll give that the benefit of the doubt. VNQ up 0.5% as well. Again, it's still in decent shape, but nothing great here on the VNQ. I don't think it actually gets up to that target here, unless we do get the Santa rally. But again, my question here is, those financials are just such a problem, if you ask me. And speaking of XLF, so XLF down, again, flat to negative in an up market. So financials showing laggardship, and you're starting to get a dead cat off that 200 moving average. So we back test the 200, and we're not getting any follow through to the upside. We're not getting a V shape. And that was obvious that was going to happen when you close below that Powell, that Wednesday pivot there, and this previous pivot. So this is a failed bullish consolidation pattern. And I think XLF is definitely on the weak side, and that should be a concern to everybody. Broker dealers here, also flattish to negative, was up earlier and now starting to flip, kind of an inverted hammer there on the daily. I think that wants to retest 460. You also have that 50 moving average up sloping, so we'll watch that on the downside, but nothing good here in the financial sector, really outside of BRKB, but that's not even really it's not a bank. It's just a holding company. So a little bit of skewedness, if that's even a word, a little bit of, misdirection from the XLF there. But anyways, let's get over to energy. Crude continuing lower. So I don't know, guys, are we going into a recession? Because crude is down another 78 basis points. We lost that trend line. That's why it's so important to, it's not about it's not about a level itself. It's about how it gets there. I told you guys for months, probably since like August, I was like, if we get down to this trend line, crude's a screaming buy. And when we got down there a few weeks ago, I said, don't buy crude down here. I don't like it. Because we came down here, we had a tail, and then we tested it. I said, I don't like that action. And crude is heading a little bit lower here. I do think there is a good buy area set up for it. The 200 will be good support. But I've got another level worked out for it already. We'll see how it behaves, but crude has taken a pretty good hit here. And again, screaming recession. XLE, we mentioned that obviously. Recession. XOP down 2.35%. Got through that gap there. That probably wants to test 125, maybe 120 here at some point. But it is getting a little oversold. But this was high on the hog, and now it's rolling over, and that's really been the case for these energy names. OIH managing to hold up. That's been the strong one the last week or so. It is up 25 basis points, but again, it was up a lot more, gapped higher, and basically gave all that back. It's now essentially flat on the day. So just weakness across the board here in the energy names. Nat gas on the bucking the trend is an outlier there. Didn't quite fill the gap, although 622, 616, we'll call it. We'll give it that benefit of the doubt there. We'll say it's filled. It's close enough. We'll see what kind of pattern it puts in here. If it starts to consolidate bullish, then it could probably, push through that. For right now, there's not a whole lot of clarity, though. You did back off the highs, so it may want to put in a lower high and go test that 5 handle. But for right now, it's holding up. Got a nice little bounce there off that 550 level. I just didn't, I knew 550 would be support. I just didn't know if it was going to be like that good. I wasn't that confident in it. But anyways, dollar index lower here today. So the market is up, but again, we're still seeing kind of a dynamic shift, I think. Again, if we're going into a recession and it looks like a global recession, right? Other countries are going to get hit a lot worse than the dollar, than the United States. So that makes sense that you could still see markets under pressure, but the dollar kind of like losing ground essentially. But anyways, in any case, the level still hasn't changed here. Still looking for 102, 103 here on the dollar index. And that could be, again, what what causes the market to bid up, and kind of float up into CPI or something of that nature. But again, dollar index a little bit lower today, so won't make too much out of it. Gold here, flattish to positive. This has to do more backing and filling here before it can move up, but I don't see any problems with it right now. Same thing with silver. And then platinum, also up 20 basis points today, but again, still needs to do more work here, but it's holding up okay, and I do like platinum. Copper also kind of getting towards the top end of this risk range that we talked about yesterday. Should just extend that just a little bit. And right into that 200 again, and it backed off just a little bit today. So we'll see if it can get above that. That would be pretty bullish here if you ask me, but for right now, it's just kind of hanging in there. I wouldn't make too much out of it. All right, over to Bitcoin really quick. So back above 17, and you are having a little bit of a bullish pattern here. Again, we talked about that the last couple of days. It bounced off the 20 moving average. You have kind of an engulfing candle there. So we are back above 17.1 right now. If we continue, this is your target up there in that 50 moving average. But again, remember the big picture is bearish overall. Anyways, let's get over to the markets one last time here. Markets close in about 30 seconds. And we're getting a little bit of a bid. Let's not make too much out of today. Dow getting a nice little pop there. Semis, again, continuing to lead higher. I think we've just done too much technical damage, and I think the banks are really sending the warning sign, as have the transports and the Russell 2000. But anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.